Okay, perfect. Thank you. Welcome to JDC West 2021 Accounting Case Presentation sponsored by CPA. Thank you to our judges, Jennifer Marlowe from CPA Saskatchewan, Chris Paulus from Manitoba Public Insurance, Stefan Normando from Craig & Ross Chartered Professional Accountants, Shelly Lakasowicz from CPA Saskatchewan, and Brian Schoonpart from Manitoba Health System Transformations Management Office. Competitors will have a maximum of 20 minutes to present. Immediately following, judges will have a total of 5 minutes to ask questions. I am our academic moderator who will be timekeeper and controlling the overall flow of the presentation. Time intervals will be noted in the Zoom chat by myself beginning at the 10-minute mark. Following the presentation, I will facilitate the question and answer period. Judges will indicate their intent to ask a question using the hand raised function, which I will call on them to indicate the next question. No questions or comments will be permitted from the audience at any time. The audience is also prohibited from communicating to the presenters in any forum, including Zoom or via other mediums during the presentation or questions. If you are an observer, please ensure your camera is off and microphone is muted. Once the questions period has completed, the Zoom meeting will end. Competitors, you are free to begin your presentation.
Thank you. Miss Mann and Miss Whitehouse, today I'm very excited to present this great opportunity to you. Now, innovation has changed our lives for the better. It's connected people all over the world and allowed us to experience things that would have never been possible before. Even this call now has all been due to innovation and technology. And at the crux of that is science. It's research. It's everything that you support. We believe that this is a great opportunity for you to participate in a growing market trend and really be a part of that innovation moving forward. Now, this is a really great opportunity at hand, but there's something very important that we also have to consider, which is the COVID situation, which has strained your financial resources and he needs to be addressed in order for you to succeed in the future. Today, my name is Ashley, and together with my teammates, Amy and Victor, we hope to help you develop an algorithm for success to ensure that even despite COVID-19, and even despite the urgency of needing that cash flow at hand that's being strained because of COVID, you'll still be able to succeed. And we hope to do that for you today.
So to develop that algorithm for success, we're going to look at how the Burlington Code Ninjas franchise can succeed despite the current difficult situation of COVID-19. And to solve this, we're going to look at your financial situation. And through this financial situation, we're going to recommend that you secure the bank loan. Secondly, we look at your pricing, and we're going to recommend that you're going to offer your virtual offerings for $150 per month. And because we're already pricing that virtual offering, we looked at your market trends and we're going to recommend that you offer the in-person and virtual services. And this will be a very profitable venture for recommendation for you. When accounting for cash inflows and outflows, it's going to have a net present value of $43,700. So let's get started on what's dire for you right now. What you have to look at right now. You've lost all your income for 2020 because of all the delays that have happened to your start. And this means that you have a capital cash flow requirement that is not needed, that you don't have. You have cash flow that you don't have right now that you need to find, which is around $48,000. So because the cash resources are strained right now for you, and because in the future, COVID-19 has made your cash flows highly uncertain, it means that you're at a high risk of financial distress and bankruptcy if you don't secure external funding right now. So what this means for you is that you have to take action immediately to alleviate your financial distress. So you're gonna overall have to find a way to find cash and save cash to stay afloat at this moment. Secondly, we looked at current pricing and what you're thinking of pricing right now in the Burlington community. And we see that people in Burlington, they're quite wealthy. So they're already willing to pay for superior extracurricular education, and you're able to offer that. And what this means for you is that you should be able to adopt a premium pricing model for your Coding Ninja franchise as you thought as before, and not to take any discounts. And we believe that you shouldn't take discounts because signaling is very important. So when you set a price, price will let customers know what kind of quality they're expecting. And once you set that price, it's very hard to change substantially once you set it because customers already have expectations. So overall, a key takeaway for you in terms of pricing is that you can optimize profitability right now by signaling your quality through your price right now and not changing your prices in the future. And finally, we looked at the current market trends, and we see that coding education is becoming a high priority. In Ontario, they've already implemented it in their curriculum. And this means that competitors are going to want to enter the market quickly. And this means that parents will also have lots of options to choose from. And when parents have lots of options to choose from, it's going to be very difficult to differentiate between which tutoring service to pick. So overall, main takeaway for you is that there's an opportunity to find ways to differentiate and capture market share as with your company. So overall, we looked at your financial situation and we see that you really needed to source cash and save cash to stay afloat. So when we're making a decision, we're going to look at risk for your company as a key factor. Secondly, we looked at your pricing and we see that you can really optimize profitability by setting a price right now, because changing prices in the future will be quite difficult. So we're going to look at how a recommendation affects your profitability. And finally, we looked at the current market trends and we see that you can really find a way to differentiate to capture the market share opportunity. So we're going to look at how a recommendation affects market share.
So now let's take a look at the options we have at hand here. So we know that this is a great opportunity, but we do acknowledge that there are some financing decisions that you need to consider. So in terms of sourcing the cash, where exactly are you going to get this financing from? So we have three options at hand here. You could take out a loan from personal credit cards, a personal line of credit, or a traditional bank loan. So the recommendation that we choose for you has to factor in the following criteria: the cost of borrowing, the amount of financing, and also risk. I'll explain why this is more important in the next slide. So looking at the personal credit card, you have the highest cost of borrowing at $15,000, and the financing that you have from this option will be more than enough. But however, your risk will be negative, is quite significant, given that it will negatively affect your personal credit score and you're taking on all that risk yourself. Given that it's a very high cost and it's also very risky for you personally, this isn't a great option. Next, looking at the personal line of credit option, it has the lowest cost of borrowing and you will have enough financing to cover your needs for 2021. However, you'll be taking on significant personal risk as well, as you'll be using your houses as collateral. So if anything goes sideways, your personal lives are very much at risk. So therefore, this option is also not the best for you moving forward. Next, we look at the traditional bank loan as an alternative. And as you can see, all the boxes tick here. The cost of borrowing is slightly higher, but it's still reasonably low. As well, you'll have enough financing to be able to cover your short-term cash needs, and you'll minimize personal liability as all the risk will be transferred to the business and none to you. So therefore, we decided that this is actually the best option for you moving forward and the one that minimizes your risk. Next, looking at the alternatives for offering both in-person services or both in-person and virtual services or just in-person. So this recommendation has to factor in the following criteria, which we defined in the key factors analysis earlier: risk, profitability, and market share. Now, looking at whether or not we should just offer in-person services, it's considerably risky due to the uncertainty of cash flows. You don't know whether or not COVID will actually subside. And given the volatility of the market right now, just offering solely in-person services is quite risky. However, compared with the market share as well, in-person services doesn't realize the additional target market that you could capture while offering virtual services. So therefore, in terms of profitability, this is not the best option for you moving forward. Now, looking at offering both in-person and virtual services, you'll be minimizing the risk of lower in-person revenues due to COVID-19 by offering both the virtual and in-person platform. In terms of market share, you'll also be able to achieve a larger market share than just in person, because you'll also be capturing the market that's less accessible and allowing parents to use the virtual platform as an alternative. In terms of profitability, we will be seeing a net present value of 43.7 thousand, as we will be showing more in the financial impact slide in just a minute. So this seems like a very great option for us to proceed with, and one that we suggest for you moving forward. Now, in terms of the recommendation, firstly, the thing that you need to do first and foremost is to address your immediate cash flow issue by securing financing from a traditional bank loan. So in order to relieve your financial constraints, you have to make sure that you acquire financing immediately in order to have enough cash on hand to meet your current liabilities. By minimizing cash expenditure until the COVID situation improves, you'll be able to put yourself in a much better financial position. So therefore, you'll be staggering your purchases and just making sure that you have enough cash on hand to withstand the strain of this pandemic, given these uncertain times, and since no one knows exactly when the pandemic will end. And overall, this will help ensure survival post-pandemic. In terms of the long-term recommendation and what you should do moving forward in order to ensure the best services to your customers, you want to provide the best quality coding education in person and virtually. As there are so many other competitors in the market, you must really find a way to differentiate in this aspect. By signaling your service quality, you can price at $150 per week, which is a mid-range between the highest and the lowest of your competitors. We're still signaling the high quality nature of your services. Also, you definitely need to ensure the quality of your online platform by delegating time towards the testing and the maintenance of your platform moving forward. And overall, this will really help to seize this opportunity and establish market leadership in a very fragmented market.
Thanks, Ashley. Now that we looked at how qualitatively going virtual can help you get into the future, let's talk about how much money we can make you. So in order to calculate our MPV of $43.7 thousand, we first looked at some assumptions. So the first one is the number of signups. Now this looks like a large number, considering that right now, maybe one event will give you 110 signups, but this includes one person maybe signing up multiple times. So actually this number is around 40 kids in 2021, and we predict that they'll sign up for about 5 to 6 months of these virtual classes. And we expect that rate to grow at 10% every year, so we have more and more students in the future. Then we looked at courses delivered, and we deliver around 1 course for every 8 students, and the courses per month at about 3 in the beginning. And we come at a positive net income about $12,000 just in the first year. And the only large initial fee that we need is the course development fee, and this is about $10,000. In the incremental revenues and income, we also looked into different costs. So cost of labor, which is around $20 an hour, which is a bit of a premium above the $14 an hour, but this is because we want to attract the best talent and we want to attract university students specifically. We'll talk more about it in the later slides. And we use the discount rate. And in the bear and bull case, we also see a positive NPV for you.
Now, in terms of the accounting implications, let's take a look at how the franchise fee was treated. Now, we acknowledge that as a franchise, you have to pay an annual royalty fee, which was calculated at 8%. So the impact of this is it should actually be capitalized as an intangible asset and not expense as you have done on your projected income statement. It must also be amortized over the term of the franchise agreement, which would be seen on the financial statements. So this would also affect the way your taxes are being treated. And so your balance sheet must accurately reflect the properties of franchise in order to be able to have an accurate tax return, as well as to represent your true costs and your true assets.
Now, we've pitched you a wonderful and very ambitious goal. How do we bridge what we have now to what this goal will take you? So we've come up with very digestible steps for you to get there. So the first part is to spread the word. So we need to start executing our marketing strategy. And the objective here is to educate the Burlington parents about the benefits of educating your child at Code Ninja. And this is where we can really sell our value prop. Our key message that we want to get across is to get your child ready for a post-COVID world. During COVID, we've seen how important tech plays in a role into our society and how it's driven us to be productive even in this current situation. So they'll see the value in coding. Then the other message we want to come across is that Code Ninjas offers the highest quality coding education. This isn't a type of education that you want to save your money on. This is something you want to make an investment in your child's future. And the channels we choose to do this through is social media and local newspaper, and also leverage our teacher networks that we worked so hard in the past year to do. And through this, we hope to establish awareness and attraction towards our program. Next, let's talk a bit about our implementation costs. So first, we looked at feasibility. So there's about $20, we are expecting to pay about $20 an hour for our educators for the virtual courses. And this is a bit of a premium above the $14 an hour that we currently pay our senseis. And this is so we can get very quality education and hire the best computer science students from universities, not just like within our area, but maybe even from other provinces. And marketing will be about $5,000 a year, and this includes marketing online and contacting professors and giving them promotional material to market to their students. Then we also looked at course development of about $10,000. Now, our key performance indicators are very important because we always want to know how we're doing so we can adjust our operations to make ourselves successful. So we wanted to meet all the issues that we identified earlier. So that's feasibility, profitability, and market trends. So first, for feasibility, we want to pay attention to our cash ratio. We never want to be in a situation where we're low on cash again. So we want to make sure that we're spending less and cutting corners where we can, but also ensuring quality. Then we want to look at interest coverage ratio because we want to be able to meet our short-term cash needs. Then we looked at profitability. We want to make money to stay in this business. And market trends, we're going to look at customer satisfaction. A way we can do this is by giving out frequent surveys online for our parents to fill, and we'll make sure that they're short, so then to incentivize to fill them out and maybe have prizes for their children if they do. Now let's look at how the digestible steps that we've broken down for you. So what can you do tomorrow? Tomorrow, you can start securing your financing, hiring and training, and developing your virtual platform. Then in the beginning of 2021, we need to stagger our purchase of equipment. This is just to make sure that we have ample cash on hand for whatever emergency that comes up. We meet our first goal at launching our Code Ninja in Burlington and launching our online platform in the beginning of Q2. Then starting at the beginning of Q4 in 2021, we start to continue to revise our online platform and learning modules. And this is using all of the data we collected over this past year, and we continue to monitor our KPIs. Now, looking at our potential risk, our major risk is that online platforms runs poorly, and we mitigated this by using available SaaS software to implement virtual curriculum.
Now, I know that this is a lot for you to digest. However, we really want to just emphasize that this is a really great opportunity. Innovation is such a big part of our society now. And now with the increasing trends in Ontario that coding is now being offered in school, and with parents now gaining awareness for coding, computer science, and technology, we really just want to help you develop that algorithm for success. Overall, we've talked about a lot of things today, but let me summarize it just briefly for you. Given your financial situation, we believe it's pertinent for you to secure a bank loan immediately. Also, we believe that it's great for you to continue to set your prices at a premium to signal to customers about your products. And as well, given the current market trends, it makes a lot of sense to offer both in-person and virtual services. And this will all realize a net present value of $43.7 thousand. We really just want to establish that base for success and help generate that algorithm and set you up in the future to be able to capture market share and really establish yourself as a leader in this fragmented market. Thank you, and we are very excited to answer any questions you may have.
Thank you. Judges? Judge Jennifer.
What do you recommend that we do in terms of the proposed corporate social responsibility program?
For the corporate social responsibility program, we see that you are tight on cash in the first year in 2021. So we believe that you should delay it until 2022 to make sure that your company is in good financial health.
Judge Chris?
Yeah, I was just wondering if you could, I see you have Appendix A on revenues, and I think you were commenting on your price strategy, and I see that the revenues haven't changed, and these are pre-COVID projections. So I was wondering if you could walk me through that.
Hi, Judge Chris. Is this the one you were looking at?
I'm looking at the last slide in the package called Appendix A. Or if you could just comment on your revenue assumptions.
Okay, sure. So this is just the incremental revenues. So that's just the incremental revenue. So we're just looking at what marginal revenue you can get just from the virtual courses, not including anything from what we currently have. So because in-person things are currently postponed, there's no revenues in 2020. So we started at 2021.
Judge Shelley?
So you identified that cash flow is a major concern. Have you identified if there are any points in 2021 where we will be at negative cash flow and need additional financing?
So at the point where you're going to have the most negative cash flow would be in the first quarter of 2021, because that's when you're still trying to open your in-person site and store, and also you wouldn't have the revenue yet because you're still opening the store. So this would be where you'll need the financing the most. So this is why we recommended that you secure the bank loan immediately to bridge that gap in the cash flow.
Judge Jennifer? Please unmute your mic.
Just wondering what was included in the $10,000 for course development for the virtual programming.
Yeah, I can take that one. So a lot of this will go towards the development of the platform itself, as well as just making sure that the platform is well designed. So a big problem within the industry is that there isn't a great standard for quality for the platform. So this will go towards making sure that our platform is very well optimized for learning, and to make sure that the course is well designed to ensure that students are being supported in this aspect.
Judge Shelley, please unmute your mic.
So what is the cost included in there for the virtual platform that we will use to deliver these courses?
So the costs include the actual developers. So we'll hire about 2 developers and they'll be working on it for about 14 hours. And then we have the platform costs, like my teammate said, and we'll also have to have someone come back, run through it themselves to make sure there are no bugs so we can ensure the quality experience that these customers are paying for.
Judge Bryan, last question.
Yes, at the beginning, you talked about a premium pricing policy. So how did that then get reflected in terms of, are you suggesting to change the pricing that they had originally proposed? Or is that going to stay as they proposed?
Yes, so one of the questions you had was to whether to make a discount because of COVID and people are more maybe price sensitive. We believe that you should maintain that policy or premium price because prices are sticky and you want to signal that you're offering a premium product. And that came reflected in the virtual offering.
And answer period is now over. This officially concludes your presentation. Thank you so much. You may leave the meeting.